Happy Friday. Welcome back to Stock Market Weekly. I'm your host, as always, Evan Medeiros. This is the show that catches you up on all of the latest happening across financial markets through the lens of technical analysis. Hope you're doing well. Thanks for joining us. The most hated rally in many years continues. We're going to cover it this week. We're going to cover a lot this week. So make sure you stick around. Let's get into it here. First, our sponsor, IBD Investors Business Daily. We have links in the description of this video to get discounts on their market surge research charting platform. I use it every single day. Check it out. Get yourself some idea generation and some fundamental analysis and that sector analysis every single day with a link in the description of this show. Now, we're going to start off with Oracle. It is Oracle's time to shine. And really what's been happening here over the past few weeks, which has made it incredibly frustrating, I think, for lots of the skeptics and the bears in this market, is that every handful of days, you get a new break in sort of this AI growth story that just reinvigorates the market, right? If there was a little bit of weakness, a little bit of softness, all of a sudden you get this nice story to surface that there's new CapEx spend or there's some new partnerships emerging or we're raising guidance, and then all of a sudden everyone kind of wakes back up, market lifts higher, and oh yes, this big secular kind of AI trend is still here, it's still working. It was starting to fade, and this week was Oracle, right? Last week we had we had Alphabet, which I know was more on their breakup news, but then Broadcom, and we just keep seeing these little breadcrumbs. And so Oracle, it's their time to shine. Stock was up some. I think I got a picture here. Yeah, 25% weak. We did get a little bit of fade off of the highs, or maybe a meaningful fade off the highs, depending on how you want to look at it. But still a very impressive move here to really just kind of rejuvenate the story, the market, and the CapEx spend there. Fed cuts. So Fed meeting is next week. Market is, I think, accurately pricing in that we will see a 25 basis point rate cut. I saw some chatter online or just folks that were perhaps making trades or investment thesis based on next Wednesday being some type of catalyst. I think most of our audience here that's following me for some time's probably aware that when something is priced in like this, you're really not going to get a big move, right? It's not a surprise, right? There's no real trade you're making on consensus, right? Markets move when there's a separation between expectations and reality, right? So the painful move would be if there were no rate cut, then you could expect, a convex payout on the downside, right? So I just happened to be reading some social right before hitting record, and I saw, a bunch of investment thesis around this. So again, I'm not bearish on this. I think it's fine, but it's priced in, right? We expect that the Fed will be cutting next week. And I think, the more important rhetoric is this the first of many? What's the future after this? Are we getting more? The other catalyst this week was Apple. It wasn't really a catalyst, kind of loosely just threw it in here. It's their big iPhone event. I think the stock ended up down on the week. Structurally, it's still, kind of just hanging out. It broke out from this bigger base in area. So, I guess as long as it's above 225 or so, then it looks still decent. But really kind of an underwhelming reaction, I think, from Wall Street, perhaps on the event, the new iPhone. What's going to be interesting, of course, is tariffs and then just how that's impacting it and margins, I think, for Apple. All right. So those are some of the headlines. In terms of the numbers here, the QQQ, this is back at the top leadership spot. So finally dethroning small caps. So small caps have been the relative outperformer here for the past 4 weeks straight. We finally got them to the bottom of the list here. There's a little bit of weakness in small caps, maybe getting a little bit tired. But Q's up nicely, SPY up nicely. It was a good week across Wall Street. Here is the price action, basically up and to the right. And if we look at this, if we look at the S&P 500 price action just a little bit closely or closer, we're closing at all-time highs, right? I mean, just off of them. Thursday was technically the all-time high here in the S&P 500. But again, we just have what continues to be a very frustrating market for sellers is every time, we start to break down, we start to break some near-term levels, it basically just doesn't last. You get a couple of days down at best, and you have to be quick to cover, or you have to be quick to get back on the horse because this market continues to grind. This is a difficult, I'd say it's a difficult momentum market, a good trending market, if that makes sense. In other words, just more relaxed stop losses, not micromanaging every single wiggle here. And again, it just still feels like sentiment's got one foot out the door waiting for this market to crack. And this is where we sort of climb the wall of worry. I think we've been pretty good at staying the course. We had 1 week, this was 2 weeks ago, where we said, okay, this is our shot to get bearish here. And again, I think last week we covered it, right? I mean, we were right for all of 4 market hours of trading, and the breakdown failed, and the market lifted, and last week we came back into basically a bullish posture essentially in this market because once again the bears failed to break this market down. So again, looking ahead, we're going to look at some evidence from some of our trading systems a little bit later that might talk the other side of this, but generally speaking here, you still can't fight this market. It is overbought. Can't advocate necessarily jumping involved, going all in at these levels, but it's a market that continues to shake people out and grind higher. Russell 2000, this is the price action over the last few months here. Again, you can see, getting just a little more sideways this week. Again, Russell 2000 has been a great spot. It's the relative outperformer over the past month or so. It's finally cooling off a little bit. And so I don't think there's necessarily anything wrong with this look right now. I think if you started to spill below this 236 area, then you've got something to work with if you're trying to be bearish or play some type of reversion lower. But for now, it just seems like some digestion here in small caps and might even set up a future move higher after it's done consolidating. The VIX is back down below 15. Again, you can see now, it's stopped putting in kind of the lower lows, and it's kind of just now hanging around at the low end area here of 14.5. Then there's some, little bit of a fear event that pops it to 18, and then it just grinds back lower to 14. This is the market that we're presented with throughout the summer of 2025. Dollar index kind of flat, not too much to say about it this week. 10-year Treasury yield certainly noticeable, getting closer to that 4%. Yields are coming down. That was our top story last week. We highlighted bonds, IEF, we highlighted TLT. Still think that's a fairly actionable place. Getting a little bit maybe, presented with some support down here around 4% for the 10-year, but generally speaking, this trend is now lower here on a multi-month basis. Sector performance this week, things were good. Tech was at the top of the list. When tech is leading, the market wants to go higher. Utilities were also in the second spot here in communication services. It's really healthcare, home builders, healthcare that were weak so far this week. So our smart trend filter. So this is our way to measure path of least resistance. What's leading, what's lagging? How do we smooth out trend? How do we simplify all of the noise out there? And so we've got 6 sectors in a bullish state right now. You can see by these little green dots, technology, up, healthcare's been up, discretionary up, right? So we've got these kind of leaders or strong momentum signals. We've still got 4 sectors now that are kind of hanging in the neutral state, which is just showing us some choppy currents, financials, industrials, materials, and utilities. And it's just the lone consumer staples here that are struggling right now. They're in a confirmed downtrend. They've been in that for some time. With a more risk on kind of market, I guess that does make sense. Now, one exciting fact this week is there's finally something to celebrate with market internals here. So the 52-week highs and lows list, which we look at every single week, we finally got some expansion north of 200. So we're finally seeing some higher readings here, some multi-month highs in the number of stocks making 52-week highs. That is undoubtedly bullish. We want to see more of that. We want to see it sustain. And so that's a nice precursor here. You want to see this trend going up and to the right, and it is right now again. So it's good to see. We've been at these dormant sort of sub 150, sub 200 levels. Let's see if we can crank those up more and more. Bitcoin getting its act together. So 110 has been that line in the sand, that kind of general area where I've been saying, you know, kind of good above it, bad below it. That's kind of the easy, just simplified version of how I'm doing the very sophisticated technical analysis on Bitcoin. And buyers stepped in. It's grinding higher. It's holding up. So it's definitely improving in all of our models across the board. And so Bitcoin, I think, is going back onto the nice list. And as long as it can stay above 110 or so, then I want to try and participate as much as possible. There's that bond trade we talked about earlier. So this is the IEF. This is the 10-year Treasury. And it did, you know, fade a little bit. It got a little lackluster here this week, but generally speaking, you know, we kind of broke out from a bigger range, and it looks good for now, right? Bonds, like I said last week, they have not looked good to me whatsoever. Have not thought about, you know, putting any excess cash or capital or anything there, but that's starting to change a little bit. So maybe it'll be fleeting and reverse on us, but for now it is working. KWEB, China. So we haven't talked about China in a little while. We continually repeat that international stocks, usually we look at the ACWX, are performing much better than the S&P 500 in lots of cases in lots of different countries and markets. But here we're specifically highlighting KWEB. You could look at various China ETF, different ETFs, but strong move, you know, persistent trend. We're going up. There are other things working when you think about breadth internally. You can also look at breadth globally. And so this has been the theme for some time now, just that ex-US or outside the US is also working this year. Consumer discretionary. So we talked about a little bit earlier, but this made new highs this week. Not quite an actionable sort of breakout, but it is just nice to see, you know, consumer discretionary joining the breakout high list. And, you know, in a short term kind of trading perspective, that looks pretty good there. As well. TLT, should have had this earlier. Again, long bond, performing better this week, right? So the IEF kind of faded, didn't have as much juice this week, but the TLT started to show a little more separation this week, continues to look good. Take a look at the volume coming in down below. So again, you can see this breakout. It just feels a little more kind of durable in my eyes, and potentially signaling a bigger kind of trend reversal at hand. Silver. You know, we've been talking about gold miners pretty much every single week. We'll highlight silver this week. New highs here. Structure looks good. A little bit of a different structure than gold, generally speaking, but, you know, just working itself nicely here and pushing to new highs. Individual stocks, Tesla. So Tesla finally kind of resolving this range that it's been in. Man, I can't draw today. For some time here. So this has been in compression mode. There's been so many cross currents with this stock and Elon Musk, of course. But finally, it seems like the market is picking a direction here. We saw some high volume breakout session on Thursday, and then a good follow through session on Friday. So Tesla seems like it wants to now, you know, get its act together and perhaps, you know, make a run at these prior all-time highs that it started to, you know, right after Elon was Trump's right-hand man. So we'll see if Tesla now can kind of make itself up into the Jan levels, up closer to 500. Of course, you know, the main driver here is just robotics and you know, and robo-taxis, and, you know, just kind of this new you know, this new robotic army that Tesla will help enable. So that's Tesla there. This has been on our Quant Rockets momentum list. It's been on for 23 days. I highlighted this a couple of times in our, I believe, our email newsletter, and probably on social, and maybe on this video as well. So our momentum model picked it up right in here, all right? And kind of the top, right? And it's a short-term top anyway, because we had to sit through about 9 days of sideways to down action. And I remember it almost getting dropped off the list here, kind of a stop loss level down in this area, but it held, it managed to stay on there. We were issuing warnings on it, and then it got its act together and still then stumbled and made, you know, everybody uncomfortable again. And so here it is, good, you know, kind of volume picking up, the breakouts happening. And this is why I say this, you know, it is a difficult, true momentum environment. There are pockets of momentum that run, but having slightly more relaxed stop losses, trailing stop losses, risk management has certainly paid better this year, right? Not saying it's always going to be the best case. Sometimes it's great to manage risk very quickly, right? But in this market environment, you are having to give stocks a little more room to breathe. That's how you're really extracting dollars and not getting whipsawed out. And we did get whipsawed out because I know we had another scratch trade, or it might have been slightly higher, slightly down, an earlier consolidation point with Tesla. But the point is, this momentum model making it work. Our other trade that I've been, and I do have a position, disclosure, I have a position here in Tesla. So yes, I do have picked it up right here and just been riding it since. RKLB. So this is another one that we've posted a couple of times or shared in the newsletter. The formation here was good. And this one started to really move again. This is another quant rockets. It's another position of mine. So disclosure, I do have a position here in RKLB. This is kind of a similar situation though, right? And I'm kind of highlighting this for education purposes too. Because kind of getting in towards the top here, right? So again, chase momentum and you get a little punished because you go sideways. This bar was brutal, right? Another one that, you know, can almost take you right out of a trade. And I know we were flashing warnings around here too. Buyer step back in, got itself up, and now here we go breaking out again. So 11 days, you know, 10%. Letting it run, have a position, and we want to see if this can continue. So our momentum model is kind of weeding through some of these things. It's finding these intermediate term trends, trying not to put things too tight and let things work. If you want to learn more about quant rockets and how it can help you, check out links in the description of the show or right there. Now, let's flip to our short-term mean reversion trading system. This is Lamerick, right? This has been around for a long time. And so this trading system, which is looking at the next several days of price actions, trying to price the next few days, where do I want to be positioned? This trading system right now is pushing in a little more on the short side, right? So you can see right now its book is 47% short, 40% cash, 13% long. Much more defensive tone here, right? Again, much more short term. Some of these positions, I got to look. I haven't done our report yet for Monday, but some of those might get covered. I need to look. So two sides of the coin, different time frames, know where you live. These things do actually make sense when you're still fishing for intermediate term trends and longer term positions, but then you can run some shorter term tactical models as an overlay or satellite portfolio, or, you know, different things, right? All of that, Lamerick, Quant Rockets, more info in our YouTube description. For next week, things on deck here. We've got, FOMC, right? The big elephant. There it is. So largely expected to have a rate cut. We'll see what the presser looks like and what the Fed thinks about the latest econ data that it's digested, and we'll see what kind of roadmap we get into year end. All right. So that's what I got. Busy week, lots of stuff going on. Markets are climbing the wall of worry. It is a hated market for sure. And it's a relentless market that just won't stop. Eventually we will get that meaningful pullback, right? Eventually we're going to get that big correction that everyone, anytime I post something bullish and then all the bears come out and say, yeah, but how could you possibly buy this market? It is so extended. Yes, they will be right soon, eventually, right? I don't know. 1 to 4 months, who knows? But for now, price action remains pretty darn resilient. All right. So that's what I got. Thanks as always. Links in the description of the show. Have a great weekend, and I hope to see you back here next week. Take care.